Welcome to TheoTrade. This is Don Kaufman. Here we are. It's October 3rd, 2016, doing the Theo Night video this evening. First, I'll kick it off in what was a light trading session inside of the broader markets over here. A number of holidays. We only did about 1.35 million contracts in the S&P futures. And again, some holidays out there. For those of you unaware, the German markets were closed today. The Chinese markets were closed today. And although the U.S. markets are open, the next really 2 days, this is through Tuesday, happens to be the Jewish New Year. Lots of traders may not necessarily be fully engaged inside of Monday and Tuesday of this week. However, later in the week, oh, trust me, they're engaged because we have got an employment situation coming out this Friday. That's Friday morning. You can see the implied volatility is already pumped up for that. Now, really what I want to cover a little bit in tonight's TheoTrade evening video is I want to take a look at what efficiency really means. And that's a term I've used a tremendous amount, but I've had literally hundreds of emails in this respect. So let's explain it to a bit of detail over here. So I've gone to the SPX. Now, the SPX is a great way to kind of look at order flow for the marketplace. Okay, and that simply means the SPX doesn't necessarily drive the marketplace, but where the SPX goes, all right, it's of course related to the S&P futures, which are related to the spiders, which are related to everything in the S&P 500. So a great way to look at what I term efficiency in the marketplace, and to describe it to you, we're going to start by looking this evening here at historical volatility. So for those of you unaware of what historical volatility is, it's the annualized standard deviation of past stock price movement. Well, what does that even mean? Ultimately, what it means is actual movement in the marketplace. And this quote-unquote actual movement is put into percentage terms. So right now, actual movement is being measured at about 11.8%. So let's actually kind of mark that in our heads over here. Is if you take a look, and this is in the short duration, okay, historical volatility, it's a 5 versus annual, so I'm looking, about a week's worth of trade data over there, but it's sitting at about 11.8%. That is actual movement inside of the markets here on a day-to-day basis. That's kind of what it is akin to, about 11.8%. Now, close that up for a moment. Now we're going to cruise over to the trade tab on thinkorswim, and we're going to take a look at, well, what do the next days kind of hold for us in the marketplace when I talk about efficiency? And this is such an important concept. So actual movement in the marketplace is showing at about 11%, which is relatively low in the short duration. What are the options implying movement to be? You see, in marketplaces, there's two types of volatility. There's, again, historical volatility, which we just discussed a moment ago, showing about 11.8%. Then there's what? Implied volatility. Implied volatility is ultimately forward-looking. In this case, we're only looking forward a whopping 2 days. But I want you to see what efficiency to me really means is when the implied volatility is pretty much in check with actual price movement. Again, actual price movement is yesterday's movement. It's 5 days ago movement kind of averaged together. But to show the efficiency of it, okay, markets are pricing the future to have about 11% risk. But the problem is they're really moving exactly that amount. And that's one thing I like to just put into perspective for just a moment. And the reason I've been talking about efficiency so much is in the past, what you would often see, these implied volatilities would be elevated. For example, you would see implied vol like 14%, and we'll call that, okay, implied vol. Then you'd see actual movement in the market only akin to maybe what? Maybe 12%. So there was this 2% edge, and it made it really worthwhile selling options premium. Now, what people are not aware of or are not looking at, and they just blindly sell options premium. Okay, listen, I made my career in selling options premium, but I don't blindly walk into anything. I have not put on okay, trades like iron condors. I haven't been selling spreads because I can't find the edge between the implied, okay, volatility and the historical volatility. Now, this does not mean that you need to compare the two on a chart, because I don't think that that's even viable. All right. So what I actually did is run vast amounts of kind of historical data, and I ran the implied volatility data from a day-to-day basis versus historical volatility on a day-to-day basis, and we're just not finding, and it's really coming out of Brexit. After Brexit, it seems that, again, the implied volatility and historic volatility are almost one and the same. So in this case, I use the SPX to denote the broader markets, but we're seeing the same exact things in products like, Apple. Everybody's heard of Apple before, right? Products like Apple. Well, here, there's a 18% implied volatility out there, or something along the lines of Google, which only has a 15% volatility. And you start to look at the charts, right? Historic volatility out there, incredibly low. Implied volatility, however, also is incredibly low. And there's very minimal areas of edge. So one of the strategies that we've been using, okay, a substantial amount, has been what we term these in-out spreads. And I guess one of the places I can actually show you the in-out spreads is in a product like, again, the SPX. For example, if you wanted to take a bearish position, okay, for the next 28 days. Here's the OC 31 expiration that expires on Halloween itself. There's 28 days left, okay, to circumnavigate some of the volatility risks, okay, and really the differential between implied and historic volatility. All I've been doing is looking and saying, all right, we're trading it like, 2161. Maybe we go out there and do something as simple, okay, as buy a slightly in the money spread. Now here happens to be a $5 wide spread for $1.90. But if you take a look very carefully, this spread is already in the money, okay, by what amount? So if you ever want to see what a spread, how deep in the money the spread happens to be, go options, theoreticals, and Greeks, go to intrinsic value. This spread is intrinsically worth $3.80, and it's currently trading a market of about $1.90. Pretty sure an execution could be achieved right around $2. And those are the types of spreads that we're using if and when we want to be directionally biased without selling premium. Because again, in effect, we don't see the edge in selling some of that premium in the current market environment. So again, expect over the next 24 hours, still some rather light trade. You can see the implied volatilities are down. The volumes are down out there. I would expect to pick up in trade Wednesday, Thursday, and Friday of this week. Of course, everything's still going on with, the German banking system over there and Deutsche Bank and possible negotiations. A lot of rumors, piling up about what Deutsche Bank's going to be doing. That could be a contagious situation in the days to come. Last, one thing I want to bring to your attention, this Wednesday night, anybody watching this video is invited. It's TheoTrade.com/analyze. This is the address you go to, okay, to sign up for what we'll term the main event over here, TheoTrade.com/analyze. It's Wednesday. It's going to be 90 minutes, and that's from 7 to 8:30 Central Time. It's going to be a thinkorswim Analyze tab demonstration, and what I call the thinkorswim Analyze tab exposed. So I have had dozens and dozens of emails requesting that I do just a full-on hardcore demonstration of the thinkorswim Analyze tab. Again, I worked at both TD Ameritrade and thinkorswim for 15 years of my career, so who better than to come out and do, of course, the Analyze tab demonstration, everything from risk profiling to probability analysis, okay, to think back over here. Hopefully I will rupture your brain a little bit when it comes to analytics in the thinkorswim trading application. Nevertheless, even if you don't have the thinkorswim trading application, I think you'll still learn a tremendous amount about options and option analytics. Again, There is no pitch. There's no catch. There's absolutely no cost to it. We're just going to go for it for a 90-minute demonstration. That's this coming Wednesday. I want to be very, very clear about it. That's this Wednesday, October 5th. Clearly, you could be watching this, okay, days from now, but don't miss it. It's this Wednesday, October 5th from 7 to 8:30 Central Time. Again, if you want to sign up for it, it's TheoTrade.com/analyze. Again, I'll throw it up here, TheoTrade.com/analyze. Thanks, everybody, for joining us here at TheoTrade. Back all this week in the TheoTrade chat room. Have a good evening. Bye-bye.